everyone, and welcome to the Naavik Gaming Podcast, a podcast in which we explore the business and future of video games. I'm Aaron Bush, and today I'm thrilled to be joined by Moritz Baier-Lentz. Moritz was a competitive gamer, went on to build and lead Goldman Sachs' global gaming practice. He spent the past 3 or so years at Bitkraft as a partner on their venture team, and just recently and excitedly joined Lightspeed Venture Partners to lead the firm's investments into all things gaming. So Moritz, one, congrats on the new role, and second, welcome to the pod.
Thank you. It's actually my second time.
That's true. Yeah, number two. You're in a rare company to join as a guest twice, so exciting stuff. But before, we'll talk about Lightspeed in a moment, but before we do that and we lose ourselves in the gaming discussion, I actually wanted to start with a tangent here, which is that I recently learned that you participate in these wild races, like the World Marathon Challenge, which I think is when you run 7 marathons in 7 days in 7 continents, which just blows my mind. And another one I saw on your profile, I'm going to butcher the name, but it's Marathon des Sables, which is like in a desert. So Moritz, I just want to know, why do you run these crazy races, and maybe what's the craziest one that you've done so far?
Well, I think the Marathon des Sables is surely the craziest one to date. We'll embark on this World Marathon Challenge, and as you said, run 7 marathons on 7 continents in 7 consecutive days. The end of this month. So training is at a peak right now. That might be crazier or not. Remains to be seen. They're both reasonably hard to do and require probably a lot of mental strength, even more so than physical strength. Why? I don't know how long this podcast is intended to be, but it's in the end, I guess in the summary is growth happens outside of the comfort zone and it gets addicting. But with these races that go over multiple days, it sometimes gets really dark, that I think you only have that perspective and reap that reward oftentimes a couple of weeks or even months after they passed. It's also a great way to meet and maintain true friends. The World Marathon Challenge I'm actually doing together with a very good friend who I met at the Marathon des Sables. Both of us suffering through multiple days, self-sufficiently traversing the Sahara. Me with food poisoning for the first 3 days, which didn't add a lot of fun to it. But those are events where you really get to know yourself and others. And the two of us already 2.5 years ago planned to do this World Marathon Challenge together. So I'm excited it's finally coming up. We're actually using the event to also fundraise for novel treatment for depression. We both had family cases, and it's a topic that's close to our heart. And so trying to connect our wild ambitions also with causes that we think matter.
Yeah, well, that's great. No, that's really awesome to hear all of that. And especially the part about growth is when you step out of your comfort zone. I love hearing that, and I totally agree. Although I'm not the one running at nights on days on end in the desert. So maybe I need to up my own game.
We still have spots for Antarctica on the 31st of January.
Antarctica. Well, let me think about that, and I will probably need several years of training to feel comfortable doing that. But that's fantastic for you and your team and everybody else who is into these crazy races. I will be rooting you on probably from very far away on that one, but that's really exciting stuff. But anyways, Moritz, we should probably talk about video games and venture capital a little bit here. I think we should. I know, fine. Let's go ahead and start and just talk about Lightspeed a bit, since this is new for you too. And I guess to start, why this change? Why did you join Lightspeed Venture Partners, and why now?
Yeah, so it was completely serendipitous. I was not actively looking, especially since I love what we were doing at Bitkraft. I'm also very proud of what we all did together over the last 2-3 years there. This happened during vacation in Greece, of all places, and actually in mainland Greece. My wife dragged me into a yoga session that I wasn't particularly keen on. Then she had to step out herself to take a call. And so it was left with one participant and the instructor. And it turned out that after a full hour of yoga and some conversation afterward, the other participant and me, we actually knew each other. There was Nicole Quinn, who co-heads the consumer practice at Lightspeed.
Oh, wow.
And the two of us overlapped at Stanford. And so we started a conversation there. She told me that they'd been looking for someone to up their game, no pun intended, in gaming. And that is when the exploration and the process started, which took about 2-3 months. And ultimately for me, as much again as I love what we all accomplished at Bitcraft, it was just a bit too good and too exciting to turn down. This is a firm that manages over $18 billion in assets under management, made 500 plus investments, many notable ones across enterprise and consumer and healthcare and fintech, and a firm that now wants to start a gaming practice and puts that trust to a large extent, at least in my hands, a very compelling value proposition and platform to work from. And so it was a hard decision, I'll be honest about that. But I feel good about it and I feel excited about it and happy to chat a bit about what we have planned.
Yeah, well, let's go ahead and talk about that. What's the game plan? What is the plan at LSVP to build out that gaming vertical? What's that going to look like?
Yeah, so I think first of all, it's important to highlight that gaming is not new to Lightspeed, quite the opposite. Jeremy Liu, who was, I believe, the first consumer investor at Lightspeed, has been investing in gaming since 2006, 2007. So I think to date, we've deployed over 300 million in over 30 investments in gaming. So it's definitely up there among the generalists with a focus in gaming, in addition to, I would say, a gaming VC industry that has historically been dominated by specialists like Bitcraft, like Makers, Griffin, Galaxy. And so this is the first proper foot forward, I guess, in terms of organizational setup. We'll have a 3-person core gaming team. But I think one of the things that's exciting for founders too is we will loop in experts across the existing consumer and enterprise investment domains at Lightspeed, where we have people who invested in companies like Snap on the consumer side or Stability AI on the enterprise side. And as we all know, games basically taking the shape of platforms, social networks, economies, and deeply fueled by core tech like AI. I think those are great, flexible deal teams that will construct depending on the exact opportunity that we're evaluating. We'll be investing across stages. So all the way from the seed stage to a pre-IPO, pre-M&A stage, we have from the get-go dedicated professionals on the core gaming team, both for early stage and then growth stage. The people I'll be working closest with are Paul Murphy, who also heads Europe for Lightspeed and who founded both Dots and Giphy. And Shan, who's been with Lightspeed for 3.5 years, hedge fund background, and she's exclusively focused on growth gaming and has done so for a while. So great core team helped by seasoned investment professionals and a founder success team.
Gotcha. A couple follow-up questions. I guess specifically with gaming, what gaming categories is Lightspeed investing in? Are you kind of covering the spectrum, or are you trying to narrow into certain zones?
Yeah, so for me, this is also something I've spent some time on over the last 2 months, crunching a bunch of data too, and also trying to tease out like where have historically been actually the venture return cases. And I think for a lot of people, the natural answer would be on the platform and tech side, pointing to IPOs of Roblox and Unity. But it is actually quite remarkable how many VC-backed, but also non-VC-backed outside return cases have been content and IP. So for us, game studios is going to be a focus area. That will primarily be on the early stage side, including the seed stage. So game studios is one area for us. And then what we call gaming platforms, which is, at scale, something like Discord or Roblox. And then third, game technologies, which can take many shapes. Anything that helps with the creation of interactive media experiences, from game engines and modding to novel 3D creation approaches to AI and procedural generation. We would even look at advances in computer networking that are closely related to gaming or interactive experiences, and anything that relates to technology with regard to the delivery and distribution, including even novel devices, including XR. So XR and Web3 are both things we'll explore, but I think a little bit more opportunistically. For us, the focus is really game studios, game platforms, gaming tech.
Okay, that makes sense. And I guess just as a follow-up, obviously one benefit of startups getting to get investment from Lightspeed is that they get to work with you, and that the high quality team that you outlined. Is there anything else you just want to add more? It's on the kind of support that founders and companies will get from Lightspeed, if Lightspeed is
to me, and this again, this is another topic I've spent thinking about quite a bit, but I think it's a tripartite value proposition, so to speak. I mean, the one thing, and that's probably the most important thing, is these are people with authentic and endemic gaming and also founder expertise. Like, I'm not a founder myself, Paul is. We're all dedicated gamers, and we can go beyond the gaming expertise into consumer and enterprise. I think the platform is important. I love working hard for founders, and my founder references, I think, especially in competitive pitch situations, are just worth so much. In comparison to what we were doing at Bitcraft, this is now a platform with significant capital under management. Even in this vintage of funds, there's $7.5 billion to deploy, which I think is hopefully appealing to founders, especially in a market that looks very different than it does in the last 2 years. We also are truly global in our support. So there are dedicated investment professionals at Lightspeed across North America, Europe, Israel, India, Asia. So we can meet founders where they are. A big part of the Lightspeed thesis is also that talent and the next range of innovation will be found globally, which to me, with the tools and access to knowledge that we have today, makes a lot of sense. And that's on a firm level, that's a thesis, and certainly also for gaming specifically, that I'm pretty excited about. And then lastly, I think it's super important to have not just a firm culture, but also a practice culture that really puts founders first. Again, like the existing founders and top founders are really our best access to deal flow, are our best recommendations in competitive scenarios. And so I think in an industry that oftentimes glorifies stars and individual egos, we really believe in true partnerships and that those build more repeated success. And so that's the philosophy part of it. And then on the personnel side of things, we have a dedicated founder success team. So these are on the gaming side, 5+ professionals from the get-go that will help our portfolio companies with PR, marketing, press and media outreach, executive talent, as well as developer talent, and then also community among the portfolio companies.
Okay, cool. And I definitely want to spend a lot of this conversation talking about the venture market where we are today, as well as some lessons learned that you've had growing as a VC over the past 3 years. But one final question on this before we move to that. I'm curious, Moritz, what did you learn at Bitcraft that you want to take over to Lightspeed? And I guess similarly, is there anything new you're hoping to pioneer or do differently now that you're at a new place?
Yeah, I mean, honestly, like all the things I just mentioned, authentic expertise, meaningful, like value-add platform, and rolling up your own sleeves, and then setting the right culture. I would say these are all things I learned at Bitcraft, and I think especially Jens and the other founding general partners, this is something that was always part of the core thesis of how to build a VC firm that is actually one that naturally attracts the best talent. So I think this working mode was very much defined by that shared time together. How much we can lean into expertise, into platform, into culture now, with also having experts from other domains that we can bring in with a larger and more global platform, which with a founder success team that is much more scaled than what we were at least at this point building at Bitcraft. I think that excites me to just lean into all these things that I think matter, that I learned at Bitcraft, just a notch more.
Okay, makes a lot of sense. Let's go ahead and talk a bit about you as a venture investor, what you've learned over the years, and just how you think about a few things, which I'm curious to unpack. And so, Moritz, you've now been in the venture capital game for, I guess, 3 years or so, and in those 3 years, we've already seen an up and down cycle in the market happen pretty quickly. I'm curious, like over that time and seeing all of that and operating with a bunch of companies, how have you grown as a venture investor? Like, are there, any ways in which you look at investments differently now than when you first started?
It's funny because I think as an early stage investor, you can really only rate yourself maybe after 6 or 7 years. When
That's
hopefully
true.
you have material returns and not just paper gains. Until then, I guess I'll take the markups and syndicates and follow investments as at least an indicator that things were going all right. But coming in 2020, especially the first half or first 9 months of 2020, I think I was actually a pretty terrible investor. I didn't lead an investment at Bitcraft during that time, but I was mostly observing and learning from Scott and Jens and the team. And I think primarily my problem was that coming from Goldman, where I'd worked for 5 years, you arrive as a banker with a terrible bias for action. So your baseline is to do deals, because in banking, you actually only get paid on transactions. It doesn't matter how much quote unquote client service you provide and how many meetings you conduct with any of these large companies that you're covering. You only get a percentage fee paid when there is an IPO or a buy side or sell side advisory transaction. And so, in some cases, even if you are advising a company that is purchasing another one, of course, you don't want them to overpay, but you certainly want them to pay, because if they don't pay at all, you make nothing as a banker. And so coming in with this bias for action was not a helpful thing for an investor role where your job primarily is maybe one of a guardian and not a guardian of capital and not more like a sniper rather than someone with an automated rifle. It's funny because I've been reflecting on that, and oftentimes deal activity is touted as a measure of success for VC firms. I don't think it's as good a metric as it's sometimes made out to be. Ultimately, your LPs will judge you based on your returns. And one might even say that amount of deals is inversely correlated with quality of deals and returns of your investments. And so you see these league tables in banking where they make sense, because the amount and value of transactions advised on is actually representative of the dollars you're making. And so the more, the better, pretty much in banking. In VC, I think it's a much trickier conversation.
Right. That makes a lot of sense. And similarly, the venture market is also pretty notoriously power laws driven, where the standout companies drive the outsized returns for the industry, but also for venture investors too. And I imagine that power law dynamic is even more profound in gaming, especially on the content side, just given the kind of the hit driven nature of the industry. And so I'm curious, with that reality in mind, how do you think about doing what it takes to land in that top percentile? What do you think that takes to pull off in practice? And what are you doing now at Lightspeed to ensure as best you can that Lightspeed and the money you're managing there lands in that top percentile of returns?
Yeah, ultimately, let's take the example of game studios because I think it's a good one. You want to make sure you're backing teams that do have a genuine chance at creating something extraordinary. And to land in that top 1% that you mentioned, extraordinary doesn't even mean landing one hit game. It needs to be even more than that. You're looking for talent that ideally has had previous commercial success at a big publisher that was responsible for the creation of a commercial franchise like Call of Duty or Fortnite or League of Legends or Valorant in a leading position. So in some cases as a creator of this IP or as a design director or executive producer. In some cases, founders have had previous entrepreneurial successes and exits. So you know, in the absence of a firm recipe to land in that top percentile, I think the best precursors you have for taking an informed shot are those previous commercial successes and founder experiences. Ideally, you have founder teams that have also previously worked together in a successful scenario. But that's really the most important thing you can pay attention to. It's a lot more important to have the right team than, you know, I would say the right idea from the get-go, which oftentimes gets refined during pre-production anyway. You certainly want to make sure it's a team that wants to swing big, where the ambition is to build the next Blizzard, to build the next Riot, in addition to just make a great first game. Sometimes founders from the get-go focus on cross-media experiences and are, you know, immediately thinking of creating IP that can also transcend into other media categories. While that's obviously ambitious and can result in a bit of diffusion of focus, which needs to be managed. I think those are all the things you almost want to see, and they all have to work out to land that, you know, top percentile that you've been mentioning. Obviously, you can make money with game studio investments, probably with the top 20%, top 10%, but yeah, to build $1 billion company is extremely hard.
That it is. Yeah, that's an understatement, I think. But cool. I guess I also just wanted to ask, Moritz, you've been on a few board of directors as a VC so far. And to all the entrepreneurs out there, as you look over all the boards that you've been a part of and the board meetings that you've been in, I'm curious what you've learned about companies who truly make the most out of their boards, or work the best with their board members. Have you spotted any patterns? Do you have any tips? Would love to hear them.
Yeah, I think the single best advice for founders that I have for running your board meetings would be to treat them as joint problem-solving sessions with your investors. Obviously, you want to update everyone on product, finances, talent, etc. But that should take maybe half of the, say, 1.5 hours, 2 hours that are reserved. The other half should be a short list of top 2-3 items, agenda items, where you believe either thinking through them or obtaining the investor perspective would be helpful. Investors, especially in the early stage, are really just trying to figure it out with you. Ideally, at least it's how we've been treating it at Bitcraft and how we're treating it at Lightspeed. If that's not the case, then maybe, there wasn't a good investor pick to begin with, but we're not there to, observe you and all your doings with a keen eye. Like we love to help, and we know how hard it is. And so draw in investors, and once they're invested, once they've wired the money, they're on your side pretty much, and so leverage them. I don't see that as much as I would like to see it.
Really? Why do you think that is?
I think maybe it's I think it's in some cases still a bit of mistrust or a perceived misalignment of incentives, where sometimes maybe founders worry that saying the wrong thing or displaying problems prominently is something that would not be well perceived by VCs. But I think we'd rather hear about problems early and try and figure out a solution together with you than hearing about it late when it's hard to steer things around.
Mm-hmm. Yeah, that makes a lot of sense to me. Well, cool. Let's go ahead and shift gears again and talk about the venture market. We can talk about just kind of the state of the market right now, what you're seeing in the games corner specifically, and we can kind of hit on a few trends and see what else you're thinking about for the year ahead. But I guess to start, Moritz, I'm curious what your outlook is for the venture market in 2023, specifically the gaming corner of things. Just in terms of like maybe compared to the past couple of years, like the number of deals we'll see or the amount raised, just those kinds of factors. What are your expectations of how that will change this year?
Yeah, I mean, obviously, none of us have crystal balls, including VCs. Just don't tell anyone. But deals very likely, at least compared to the 2021 peak. I think 22 is down already a little bit, and I'd be surprised if 23 exceeds 21 levels, and probably won't exceed 22 levels either. Valuations, the way it typically works is that early stage and private market valuations follow public valuations. They first trickle into the growth stage, where we've already seen in secondary markets, the large players like Epic Games, Discord, taking hits on their valuations in accordance with what we've been seeing in the public markets. It oftentimes does take a little bit longer to also reach the early stage private markets. But I think we're at that point where at least you wouldn't see anyone going out right now and try and do something crazy. So yeah, I mean, my if you want to pin me down on a number, early stage valuations will probably go down something in the domain of like 30 to 50%.
Oh wow. Okay. Well, it's not all sunshine out there, I guess. And maybe it's a return to normalcy in some ways. Definitely at least some pockets of the market. But what that means also is that a bunch of companies some of them are already happening, as you mentioned, and some will continue to see more sideways rounds or down rounds, and likely feel increasing pressure to either run leaner or prioritize profitability more than they would have a year ago. And I'm just curious, in your conversations with leaders, like what are those conversations like right now, and what are you helping CEOs think through there?
Yeah, so luckily, before my departure at Bitcraft, kind of during Q1, Q2, and in some cases trickling into Q3, this was a big focus for all the portfolio companies that I'd been working closely with. Luckily, a lot of them were able to land pretty substantial capital infusions, by around Q3. Theorycraft, InWorld, Horizon, all raised $50 and $40 million Series A. And so there's right now, at least not on the companies that I invested in and the boards that I sat on, which, obviously those have been to transition to Bitcraft in the meantime. There are no cases where there is a need to raise capital at the moment. So we try to button that all up. And in most cases, that was a capital infusion that would get them through the next 24 months at a minimum. And it's also, that'd probably be my advice to, if you're in a situation where you need to raise now, 24 months is probably a good time. And that might not necessarily mean raising more, but that might mean cutting burn to adjust depending on how much investor interest you can drum up these days.
And how does that compare to what companies have normally been raising for over the past couple of years? 24 months. It seems like an increase, but curious what your perception on that is.
A little bit. I mean, I would, if you just go by the number of months, maybe average was around 18 months or so, but I think it's better to think about it in terms of what is the next milestone that you're going for and solving for that. In the end, between one fundraise and the next, you want to show one substantial means of progress. For an early game studio, that could be building a prototype, putting out a playable, launching in a test market, especially anything that helps collect data points. And even if that's just playtesting data, ideally it's market data of sorts. And if it's not launch data and installs and usage, it could be something like pre-registration, Steam wishlist activity. In an environment like this, founders will look for substance as much as possible. And so I would look at the development plan, figure out what's a realistic timeline to reach that next milestone, add a bit of buffer, and let that determine how many months of burn should be covered in the next race.
That's smart. Let's go ahead and talk about a few corners of the gaming market here and what you're seeing and thinking about. And maybe let's begin with what was all the rage the past couple of years, Web3 gaming, which I guess is what we're calling it now. The name changes all the time. But clearly there was a lot of FOMO, broken economic models, and it's since been pretty slammed, not just from the hype cycle, but frauds and hacks and bad actors as well. And hopefully it's taught both founders and investors to be more prudent there. But I'm curious from your perspective, when you look at Web3, what are you focused on right now, if at all? And how are you approaching and ensuring that you don't fall into the same pitfalls that other people did over the past couple of years?
Yeah, so I think it's very easy in general to have hindsight on things. It's a lot harder when you're in the moment of a potential major shift, which Web3 certainly has the capacity to be that driving force, and it still has. I think it's a lot trickier to be cautious and not lean in as an investor, because obviously you don't want to miss out. Like, FOMO is real. And it results in discussions that are analytical and critical internally at VC firms, but still littered with emotions and cognitive biases. It is an incredibly hard task to get this stuff right. And at Bitcraft, we, had different perspectives on how much we should lean into this space, how important we thought this domain would be for the future of gaming, how much we should give in on a bar for talent going into this space versus quote unquote traditional or Web2 gaming, how much we should lower the bar for what is an acceptable price or dilution along the way. I think a pitch that was too focused on things that just mattered a little bit less than the fundamentals, which is building a great game that is fun. I came up with this super lame thing to say, return to fundamentals, fun.
Yep.
Yeah, okay. But essentially, if you look at blockchain as a value driver, I think that can be a fallacy. I think in itself, it's more a means of value distribution. The value for any media category, including gaming, comes from how many eyeballs it can attract for how long. For that, good game design with good core loops, with social dynamics that draw people in for months, for years, is so much more critical than how value will be distributed through blockchain. Blockchain can be a tool for value creation, especially when it becomes an incentive for community, for offloading marketing into a community, for incentivizing maybe players to create levels and items for your game. But I think you can't get around the core principles of good game design. And so I look at Web3 game studios, and I've always looked at Web3 game studios simply as game studios. And then whether they want to use Web3 and whether they want to use blockchain for, taking a novel approach to digital identity, assets, and ownership, that's all fine. But we can discuss this on page 7 of the pitch. You don't need the word Web3 or crypto on the cover. To me, it's like saying, hey, we're building an Amazon Web Service-based game studio. Fine, if you want to use that as your backend. But again, let's talk about the game. Let's talk about who the people are who are founding this game studio, what games they've built previously, what games they've shipped previously, and let's talk about what you really want to build as an experience for players. And then we can talk about your backend, and then we can talk about whether you want to use the blockchain or not. But yeah, so to me, Web3, we look at Web3 game studios because we look at game studios.
Yeah.
We also look at Amazon Web Services-based game studios.
Yeah, and I guess a next step in kind of that line of questioning too is do you need the blockchain? Or then what if you're an investor, is it in tokens? Is it in equity? And it seems like over the past year, it's been interesting to see the innovation, I guess you could call it innovation, and just financing models and how teams are raising money in different ways. Obviously with, some broken economics underneath in a lot of cases, but I'm curious from your standpoint more. It's obviously you're focused on the fundamentals of the game itself first and foremost, but when it comes to investing, are you open to investing in holding tokens? Do you mainly want equity? As a VC, kind of where do you land in that spectrum of things?
Yeah, so first of all, we have a blockchain sector team at Lightspeed as well, and then we also have Faction, which is an affiliated fund of Lightspeed that focuses exclusively on Web3 across gaming, but also other sectors. So there's certainly team members and folks that are actually looking full time at blockchain and Web3. So by all means, as a firm, and certainly from the gaming side, I wouldn't want to miss out on a great studio platform or technology. We can hold tokens as a firm too. So there is that option for us. With tokens, again, to me, this is an innovation in the industry, but in the end, it's an exchange between ownership and the price you pay. And, whether that be in the form of equity or tokens, at least ultimately or in the long run, should really not make a major difference from my perspective.
Gotcha. That's interesting. Well, let's go ahead and shift from talking about what was all the hype last year to what seems to be all the hype right now, which is AI. Based on what you're seeing in deal flow, where are we right now? And the hype versus reality spectrum, how real and timely truly is AI in games right now, do you think?
Yeah, so AI has been a topic that's been fascinating me for a while. Actually, in 2010, I took machine learning. I think back then it was called intelligent machines classes as part of my CS degree. And even during my time at IBM and then even at Goldman too, I always had one eye on AI because it was clear that this would be a fundamental value driver. I came back to this article that Tim Urban wrote, the author of Wait But Why. Amazing blog, by the way. I think in 2015 or 16, he had a great long form piece, The Road to Superintelligence, with this curve that just goes, exponentially, and us standing here, and this is the history, and then kind of goes almost vertical from there. It's a bit scary to think about, and when you look at ChatGPT, it just feels so real, and you wonder, especially with the emergence of GPT-4 and other innovations that are coming out over the next years. And this is just what you see as a consumer. You don't even know what's going on under the hood. That's not public. You can easily spend all your time exploring that as an investor, and it will have implications for many sectors. I think that's absolutely true to say. Does it have major implications for gaming? I think so. I mean, InWorld was probably one of my favorite investments at Bitcraft when we let the seed in December 21. Amazing group of people with really deep expertise, especially in conversational AI, even reaching back prior to the Siri days, and building a platform for intelligent characters and NPCs in video games, effectively in Unreal Engine or Unity, but not for environments and visual design, but for characters and logical design. So you would find yourself in these immersive environments and have totally natural and unscripted conversations with characters from a wide variety of background and personal attributes and behavioral styles that you can build within minutes. This stuff already works. It's just fascinating. And then, especially over the last, I guess, 2 months, what we've seen around automated 2D and even 3D asset generation on top of Midjourney and Stability AI, companies like Scenario GG for 2D, or Luma with Nerve and procedural 3D creation on the 3D side. It's really mind-blowing, and it's very different from the tools that were available to developers 6 months ago. Will that have implications on the development pipeline, like concept art, for example? It's very easy to see how producing concept art is just now a matter of minutes versus hours and days. And assets for especially mobile games. If you just need another potion in your inventory, to create another 100 or even isometric visuals, it's also a matter of minutes these days. I think it's very hard to say from an investor perspective what makes for a great investment and venture return case. Like, we're lucky to, on the enterprise side, to have invested in Stability AI. So the underlying core on which this all builds, that seems to be a value driver. Everything that's built on top of it, it's always hard to know whether that additional layer will have enough technological differentiation, and also whether having that dependence on the core technology will ever allow you to really break out into a venture return case. If you take Unreal Engine and Fortnite, a big part of Fortnite's success is because Epic Games can obviously always access the bleeding edge of the Unreal Engine. And they build Unreal Engine in conjunction with Fortnite. No other game has that luxury. And so, not many games can leverage and capture the value that stems from that in the same way. I think that's one helpful framework also to look at procedural generation and AI. Right now, all the rage is Stability AI and Midjourney. I haven't seen anything on top, at least on the gaming side, where I've pulled the trigger. InWorld is still my only AI gaming investment, but it's very likely, I would say, that 23 will be a year for me where there is a number 2 or 3 investment in that space.
Yeah, that's all really interesting. Well, what about the games themselves, Moritz? What type of games or founders or companies or specific genres are you looking for in terms of backing the studios that are making these new upcoming games?
Yeah, so I think, I noticed this for myself, that I probably have a bias toward AAA cross-platform experiences that stems a little bit from my own gaming background. By the way, we didn't touch on this during the blockchain discussion, but I think it's also sometimes a little bit too easy to fall in love with concepts. That can happen on the AI side too.
Yeah.
If you, I love the idea of true digital identity and assets and ownership, but frankly, in 2003, when I was selling all these items, playing Diablo 2 and funding my college and grad school effectively through just custodial market making, no one really cared that these characters or items were property of Blizzard, and that you had to go to great lengths with high friction through eBay and synchronous meetups in the game to trade the items. like this still all felt like your character and your item, and no one really worried about Blizzard taking it away from you. It's, I think maybe on the AI side too, you look at ChatGPT and you're like, wow, this is the everything machine. And then you spend a bit more time with it, and accuracy is actually a big issue, right? Like I think it's super interesting to see out what will happen on whether Microsoft or others together with OpenAI can actually build a Google search competitor that is more compelling. Because right now I would still rather use Google search than ChatGPT. And sometimes the initial results are very impressive, but it's really also hard to take it to the next level because inaccuracy supercharged is still inaccurate. Yep. And adding more compute to the same flawed logic doesn't necessarily turn it around. But I'm not an AI expert to have an opinion on that. But it's that's kind of like what you struggle with as a VC too, and what makes our job pretty hard. But I'm not complaining. So back to the game studios. I personally have a bias for AAA cross-platform experiences, like people who've had their design and publishing chops at Blizzard, Riot, Epic Games, and are setting out to build a new game studio that ultimately can step into that legacy of these big companies that they left. Paul, who also heads Europe for Lightspeed and is part of the core gaming team, has tremendous deal flow in Europe and is a little bit more mobile focused, based also on his personal experiences with Dots and Giphy. And then Sean looks at growth gaming and agnostic between AAA and mobile, but probably also leaning a little bit more on the mobile side. At that point, you can look at some scaled publishers with multiple IP assets under their belt. And so that's probably on a high level how we'll divide it up. Ultimately, what we look for is top talent. And that's probably much more important for me than a specific thesis on a genre or type of game you're building for. We obviously want to make sure there is enough substance in the market and demand in the market. But those top teams that are going for their ideas have usually done their homework on that. And so it's less of a concern.
Gotcha. That makes sense. Well, we've talked about Web3, we've talked about AI, we've talked about the game studios themselves. I'm curious if there's anything else that you're excited about in the games industry right now. Is there anything maybe that doesn't get enough attention that you want to shout out as an area or two that you're looking at?
I think there's a slate of novel 3D creation techniques that don't deserve or that don't get enough attention, not the attention that they deserve. And these are techniques such as NERF or photogrammetry or volumetric video. If you think about how we produce most photorealistic looking content in 2D, so that's typically photos. We leverage reality to create photorealistic 2D assets. And that's a very contrived way of saying, if you see a nice sunset, let's say, do you take out your phone to capture a picture of it? Or do you open up Photoshop and try and recreate it digitally? I would say for most people, it's probably the former. And those photos look pretty good. And they can also be moving photos or videos. So we figured that part out. But for 3D, somehow we don't do it this way. If you want a video game with your cat in it, let's say, you wouldn't think about taking out your phone and holding it around your cat while it moves along, and then you upload that into Unity or Unreal and you have a perfect 3D model of your cat. People shake their head and it's like, well, that's not how it works. Well, actually, I mean, volumetric video and NERF has come a long way, and I think we're starting to get there. That paired with AI technologies, it would make sense that ultimately for photorealistic 3D creations, you also start with reality and you don't start digitally from nothing. But it's super hard. But I think that's also a super interesting area.
Yeah, well, I'd love to talk more about that, but we gotta start wrapping. So maybe a final question for you, Moritz, is if any entrepreneurs want to reach out where can they best contact you or the broader Lightspeed team?
Yeah, they can go to our website, lsvp.com, or they can just reach out directly to our team members and me. I'm at moritz@lsvp.com. We'll answer any inbound we receive.
Awesome. Well, Moritz, thank you again for joining me today. I can't wait to follow along with everything you're going to do at Lightspeed, and best of luck in 2023.
Thank you. Thanks for having me.
And to all of our listeners, if you enjoyed this episode, please make sure to give us a like, subscribe, 5 stars. It would mean a lot. We'll put the links to all things Moritz and Lightspeed in the episode description below. And of course, we'll drop some links to Naavik's resources as well. Thanks for listening, and we'll catch you next time.